What's going on YouTube? This is your boy Jeremy Frazier back at it again with another video. And I want to continue this series to discuss financial literacy, right? And in this video, I'm going to be talking about taxes. Our favorite, right? Taxes. One of those things that we can't ignore and we can't get rid of. So let's get into it. Let's talk about taxes and how we can actually take advantage of opportunities that exist right now to reduce the amount of taxes that we pay. So, one of the quotes that resonate with me when it comes to taxes is one by Benjamin Franklin, and it goes as such. In this world, nothing can be said to be certain except death and taxes. It's very hard to avoid paying your taxes, right? Because that's illegal. However, we've seen people in the top 1% pay zero to no taxes legally. Well, why can they do that, but most of us can't? Well, that's because they have tax professionals that know the tax laws like the back of their hand. And they're taking advantage of things that are written that any one of us can take advantage of. But it takes education on taxes in order to understand it, right? When you find out the loopholes you have when it comes to taxes, or avoiding taxes, I should say, you can start taking those opportunities for yourself so that you're not giving away so much of your money, right? Because think about it. You got to pay all these different type of taxes. You got to pay income tax. You got to pay federal and state tax. You got to pay sales tax. You got to pay Medicaid tax. You got to pay Social Security tax. Tax. And it can be worrisome knowing that you're getting pretty much half of your paycheck after taxes. And it's hard to be able to work with the amount of money you're getting because you're giving it all away in taxes. Well, the wealthy, they figure out ways to avoid paying it because taxes are the biggest wealth killer. So what can we do? Well, the first step is understanding this. Depending on what you're doing for a living will depend on what kind of taxes you need to pay. And on the screen right now is the cash quadrants. This is basically talking about different type of people who are working and making income and how much taxes they'll need to pay. This is by Robert Kiyosaki from the book Rich Dad, Poor Dad. And I love the way he broke down these quadrants because it makes it simple for the average person to kind of understand how taxes work, right? So we're up here in the top left. Employee. This is 90% of us. This is majority of us. We pay around 40% in taxes. All the taxes we're paying as a whole from paycheck to paycheck is around 40%, which pretty much means you're getting only 60% of your paycheck every time you get paid. So in the long run, when you think 30 years down the line, when you're ready to retire, think about how much money you left on the table from getting taxed like crazy. While you look over here at big business owners, they only got to pay 20% because the way that they set up their business can be a partnership, it can be an LLC, or it can be a C corporation. And the way that the taxes work for a big business versus an employee is much different. And a big reason why is because big businesses have a lot more tax write-offs than the average employee. And because of that, they don't get taxed the same rate as a 9-to-5 employee. So think about that. Not everybody can be an entrepreneur, but if that's something that you can see yourself doing, it may be worth seeking because you can reduce your taxes quite a bit by becoming one. Bottom left, self-employed. Yikes. 60%. It's tough, right? These are like your doctors, your lawyers, and people like that with private practices in their own small business. They end up paying a lot more because they have a lot less employees. So they have less write-offs because they're not paying as many people. They're taking a lot more income because a lot of those skilled private practices, they're making $250,000 and above, which puts you in one of the highest tax brackets. So you're paying more taxes off jump. And when you work for yourself, you don't get the opportunities you get when you work for a business as an employee. As an employee, you get a lot of the taxes taken care of by your employer as well. As a self-employed person, you have to pay for your entire Social Security yourself. You have to pay for your entire Medicaid taxes yourself. You have to be the one to figure out how much taxes you need to take out for your state and federal. So you end up getting hit even harder than an employee by being self-employed. Now, I'm not telling you that means it's a bad option. All I'm saying is you may be paying a lot more money in taxes being that than trying to be a big business owner or an employee. But there's perks to it, right? You get a lot higher of a salary, so you got to take the good with the bad. And the last quadrant is investor, right? Wow. Zero. What do you mean zero? How do you not pay any taxes if you're an investor? Well, if you make any kind of money from your stocks, which means you got in a stock at one level and then it got up to this level, you don't have to pay any money on that unless you sell that stock. And if you hold on to that stock for more than a year, you only got to pay a capital gain tax, which is less than the 20% big business owner and then 40% employee and 60% self-employed. So just be mindful. You can let your stock investments run up. You can make $1 million in a year from your stock investments and never have to pay a dime if you don't sell. So just be mindful. You can start taking your employee money right now and investing it and getting back returns that would put you in a bigger tax bracket if it was taxable. But because investments are tax deferred until you sell, you can pretty much make as much money as you want as an investor. So just keep that in mind. So now up on the screen, I have from the IRS single filers versus married filers. And what's important to understand about this is the government incentivizes relationships. And as a single person who makes a lot of money in this country, they will tax you more. And you can see it as you get up here in the higher tax brackets in the single versus married, right? You have to pay 35% as a single person if you make up to 578K versus making the 693K married, you pay the same 35%. So essentially what you're saying is you could make $100,000 more married and be in the same tax bracket as someone who's single. And they pretty much are encouraging you to be in a relationship to lower the taxes. That's what they want from you. So just be mindful. I'm not telling you go out there and get married. But what I am telling you is as a single person making a lot of money in this country, you're going to end up spending a lot more taxes than you do as a single person. And mind you, most of us, our household income is not 600 something thousand or 500 something $1,000, right? It's much lower, probably under $150,000 is more like where we're at. So it's important to understand that when you are determining whether you're going to do your taxes, a lot of people see what will they make out better with, filing married jointly or filing single. You know, talking to your tax accountant can help you understand which one benefits you more. So just make sure you understand that when you do your taxes. So this is where the bread and butter is when it comes to taxes. This is the reason why a lot of top 1% individuals are able to pay little to no taxes. They get so many more tax write-offs, right? As a big business owner, you can write off anything within reason. Meals for potential customers and clients, right? Your house bills, your cell phone bill, all these different things. Because if you're doing work in these places, it's a business expense. You can write off your gas, you can write off flights, all these different things. While as an employee, they're taking away more and more deductions every single year. And if we take a look at this list, right, you only got a few things you can write off. Your mortgage interest, your IRAs, your 401k, you know, your child, you know, one of you can write off a child health savings account. Mind you, a lot of people don't even have kids. A lot of people don't own a house. A lot of people don't have an HSA account. So if you don't have half of the things on the employee list that you can write off, that's even less things, which pretty much means you're taking more money. And the more money you take because you have nothing to deduct, the more they're going to tax you. Versus a big business owner, they're going to pretty much say, hey, I spent all my money on business related things. So even though I made 500,000, I really only took 50,000. So don't penalize me for not taking a lot of my money because I'm writing off all my other things as expenses. So that's the way the game works. You ain't gotta like the game. The game is the game, no matter if you like it or not. So just make sure, as a whole, when it comes to taxes, reach out to your tax accountant. Find your tax consultant. Find someone that understands the tax laws very well. You're not going to understand the hundreds and thousands of pages of tax codes. Just get someone that can do it for you and explain to you your options. But it's important to have a basic understanding of taxes because you need to know the right questions to ask when you go to these professionals. So what I'm going to tell you is Tax-Free Wealth. This is a book by Tom Wheelwright that you can read that can give you a basic understanding of taxes and help you understand some more options that you have. You don't have to buy it. You don't have to read it. But I'm giving this to you anyway because it helped me a lot and it opened up my eyes when it comes to taxes as a whole. So, with that being said, make sure you learn about your taxes. Until next time.
Put that work in. 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 They got to catch up. Cause I'm too fast like you say. Don't put me in no one-on-one, get cooked up. Well done. Came about that low pond, but now I'm swimming with